ARK Invest just bought some more Square Block stock, and now all of a sudden Hindenburg has disclosed a short position on the $44 billion, or once $44 billion company, Square. And I say that because in the pre-market, well, let's just say Square is not very happy. It's actually dragging Coinbase down even more as well. Coinbase was down 11% in pre-market. Now it's down about 15%. But forget about Coinbase. Hindenburg Research has disclosed a big fat short position on Square. Square was down 6% yesterday. Makes you wonder who knew the Hindenburg report was coming. Now Square stock is down 19.5% after Hindenburg Research discloses their short position. This comes after their last mega short on the Adani network, which was a massive short investigating the fraud or potential fraud of shell companies being used to massively profit off of Adani stock in India. Hindenburg Research was also the company that exposed Nikola for the fraud that it was, rolling their truck down a hill and implying the truck was actually powered by a hydrogen power engine, which was all a fraud. Now, Square is apparently being accused of, quote, fraud facilitation, and Hindenburg is suggesting that Square stock could fall as much as 65 to 75% based on the findings in their research. Well, folks, make sure you get yourself life insurance because we need to buckle up and get into this research into Hindenburg. And you can get that life insurance by going to metkevin.com/life. If you sign up, I make a little bit and you get awesome life insurance. You can Apple Pay and Android Pay for it. Make your life simple and put it on auto pay. It's what Lauren and I use to pay for our life insurance. So check them out by going to metkevin.com/life. All right, Block, formerly known as Square, is a $44 billion market cap company that claims to have developed frictionless and magical finance technology with a mission to empower the unbanked and underbanked. Our 2-year investigation into Block has concluded that Block has systematically taken advantage of demographics it claims to be helping. The magic behind Block's business is not innovation, but rather the company's willingness to facilitate fraud against customers and the government. To avoid regulation and dress up predatory loans and fees as revolutionary technology and mislead investors with inflated statistics. Our research involves dozens of interviews with former employees. You have to be careful with interviews unless they can provide evidence, so we'll take a look at that, as well as litigation records and FOIA requests. Most analysts are excited about the post-pandemic surge of Block's Cash App. That's true. During the stimmy days, man, Square was exploding. Our research indicates, however, that Block has wildly overstated its genuine user counts and has understated customer acquisition costs. Former employees estimate that 40 to 75% of the accounts they reviewed were fake, involved in fraud, or were additional accounts tied to single individuals. Yeah, but that's not necessarily wrong. I mean, if Square comes out and says, hey, we opened 1 million new accounts, and half of those are people making a savings account and a stock account, I mean, that is accurate, right? That's incumbent upon the investor to realize the same person can have multiple accounts. That's not necessarily fraud, so I want to see where this fraud is. Core to the issue is that Block has embraced one traditionally very underbanked population, criminals. Oh, okay, let's see. When users are caught engaging in fraud, they didn't ban a user. They showed how blacklisted accounts were regularly associated with dozens or hundreds of active accounts suspected of fraud. A phenomenon of allowing blacklisted users was so common that rappers bragged about it in hip-hop songs. Okay. Jack Dorsey has publicly touted how Cash App is mentioned in hundreds of hip-hop songs as evidence of its mainstream appeal. I paid them hitters through Cash App. Block paid to promote the video for a song called Cash App, which describes paying contract killers through the app. I mean, some of this is probably designed to be hyperbole. Would be interesting to see if there's actual evidence of this. And I'm sure there is. I'm sure every bank to some extent has criminal activity that goes on. I'm sure people get zelled for crimes all the time. Here's the drug money. Zell dinner, $5,000. Anyway, let's see here. To test this, we turned our accounts into Donald Trump and Elon Musk, and we're easily able to send and receive money. Yeah, I don't know why that's necessarily bad. Is there something wrong with that? Maybe. I suppose if there's a KYC rule, like a know your customer rule that requires you not have a fake name, but I suppose anybody can make like a MetaMask wallet and transact, but then again, that seems to be more of the DeFi space, right? So, okay, interesting. And those are some thoughts that would be running through my head. Former employees described how Cashapp suppressed internal controls and ignored user pleas for help as criminal activity ran rampant on the platform. It is also true that companies like tech companies don't really have the incentive to argue or to start banning and closing a bunch of fraudulent accounts or potentially fraudulent accounts, because it does hurt the user metrics, right? You saw the same thing with Twitter with the bot army. Well, wait, Twitter happened to be founded by Jack Dorsey, who's now running Square. Wait a minute, is it possible that fake accounts propping up user metrics at Twitter are also happening at Jack Dorsey's other company, Square? Oh, that's interesting. COVID pandemic, existential threat to merchant services in the environment. Amid Cashapp's anti-compliance free-for-all, the app facilitated a massive wave of government COVID relief programs. That is true. No bank account needed. That's true. They let people deposit your money straight into this so people could spend it right away. Massachusetts sought to claw back over 69,000 unemployment payments from Cashapp just 4 months into the pandemic, suspecting transactions at Cashapp's partner banks were disappropriate. Okay, well, this is actually interesting, because if you could make a fake account and then start claiming potentially stimmy checks or unemployment through Cashapp, that creates a really big problem. That's very interesting. That is a fair point. The data shows how it compared to its Ohio competitor. Cashapp's partner bank had nearly 10x the number of applicants who applied for benefits. Yeah, so this goes back to COVID fraud. I believe that there was a lot of COVID fraud at basically every level. I definitely believe that. As block stock soared on the back of its facilitation of fraud, Jack Dorsey collectively sold over $1 billion of stock over the pandemic. Yikes. And other executives also dumped millions. All right. Okay, so Congress passed laws that legally capped interchange fees, but Block avoided these by routing payments through smaller banks. Frankly, that doesn't sound like fraud. That sounds actually smart. To some extent, like, and I get it. I think there's a legal gray loophole there that they're jumping through, but Square isn't a bank. JP Morgan has a limit on the fees they can assess you, but like smaller banks don't, because they face less regulation. That's why we're having a banking crisis right now, right? And so if you could take the money that people deposit with you and spread it out to multiple different small banks, and now it enables you to charge more fees, that's probably part of the game. I don't know that that's necessarily fraud. It's probably wrong. That's not the intent. But even SoFi, who has its own banking license, is like, we now offer $2 million of FDIC coverage. How are you doing that? Oh, well, we're going to a bunch of small banks. Exactly. So, that's just sort of the game that gets played. That doesn't seem so terrible. I'm looking for like the smoking gun here, because usually there's something like really crazy. But so far, this doesn't seem very surprising to me. And this is, I won't reiterate how I hate financial stocks in a recession, but anyway. Competitor PayPal has disclosed it's under investigation over its use of small banks to avoid interchange fees. Yeah, but that doesn't mean it's wrong just because you're under investigation. Maybe a law will be passed that changes that, right? Block's $29 billion deal to acquire Afterpay closed in January. Let's see here. If Afterpay has been celebrated as a major financial innovation. I mean, no, I think it's just a great way to charge people massive interest, allowing users to buy things like a pair of shoes or t-shirts and pay over time, incurring massive fees if subsequent late payments are made. The big problem with buy now, pay later right now is, the big problem with it. This is true. Well, yeah. Somebody's saying, remember, their argument is whether to short them, not whether it's legal or not. I don't think you could say them taking advantage of a legal loophole is a reason for shorting, right? I don't think you can argue that. Like, taking advantage of a legal loophole, like, you would expect businesses do everything they can to maximize their profits. That's why legal loopholes often exist, because they lobby to have those legal loopholes. It's all a broken and rigged system. Don't get me wrong, I'm not defending the system. I think how complicated things are complicated on purpose to make the rich richer, and I think it's disgusting. But let me say one thing for sure. You should never use buy now, pay later, in my opinion. And I've said that ironically, but honestly, I have said that since 2021, when I first started covering Affirm. I'm like, let everybody else use that, but you should not use it and run from it in a recession. I've said that since day one, and I still believe it. Like, you should not use these services. They are very, very expensive. Afterpay was designed as a way to avoid reasonable lending rules, such as, basically lending without credit checks or charging higher APRs. Yeah, but again, that's not illegal. Like, the fear about buy now, pay later regulation has been in existence for the past 2 or 3 years. We already knew that. There's nothing wrong with that. Afterpay delinquencies are skyrocketing. No shit. Going into a recession, they have no collateral. You think a firm is going to show up at your house and take the sneakers off your feet because you bought them with buy now, pay later, and now you're not repaying? No. What are they going to do? They're going to kick you off the platform. That's it. That's the most they can do. That's not a surprise. Block regularly hypes mundane predatory sources of revenue as technological breakthroughs, such as 31% of Cash App's revenue comes from instant deposit, which Block says it pioneered. Every other major competitor we checked provides a similar service. Dude, it's marketing, man. Who cares? Like, that's not fraud. There's nothing wrong with that. I don't know, man. Hindenberg, this one's pretty weak so far. On a purely fundamental basis, even before factoring in the findings of our investigation, we see a downside of 65 to 75% in the shares. Maybe you do. Block is valued like a profitable growth company. Okay, so now we're going to talk about valuation. I'll talk valuation. I'll go through the valuation myself in a moment. I'll go through the valuation. Nobody gives a crap about price to book for a tech company, dude. Come on, man. And selling for a forward adjusted earnings multiple of 41. We'll look into that in just a moment. We'll look at your multiples. Block is also facing threats from competitors like Zelle, Venmo, PayPal. No shit. None of this is news, man. We think Block misled investors on its key metrics. Look, having fake accounts, that's the biggest thing you got. So show me more about, and the CEO selling shares. Well, you could say the same thing about Elon Musk. Elon Musk dumped $24 billion on normies, myself included, last year, okay? So what? Jack Dorsey built up a $5 billion fortune. Good for him, man. That's not fraud. That's the game. That's what stocks are, man. So, where is the fraud? And then we're going to go through the fundamentals. So, a few things. So, let's go through their evidence. Rapid adoption will lead to exponential growth. Fantastic. Where's the evidence of fake accounts? That's what I want to see. Block has a fundamental downside. Oh, I'll go through that myself in a moment. They have criminals on their platform. Dude, every bank has criminals. Criminals are everywhere. Everybody's a criminal to some extent, I imagine. Everybody breaks the law at some point. And in theory, if you've ever rolled a stop sign in your life, you too have broken the law. And after all, what is a criminal? Well, a criminal is somebody who breaks the law. Therefore, are you not also a criminal? So then it's just there are varying degrees of criminals. Signs are hard to miss. There is even a gang named after Cashapp with members arrested for fentanyl distribution. Okay. like whatever. I paid them hitters through Cashapp. Okay, like, this is fantastic PR for Cashapp. This is interesting. I want to see the fraudulent account stuff. And look, I want to be clear here. I don't own Square. I don't care if the stock goes to zero. I really don't care. I'm just trying to look at this as a reasonable person. All right. Cashapp has claimed to have 80 million annual transacting active users, a highly inflated number given evidence of massive user duplication. Okay. Cashapp, page 7 of the SEC filing, they say the company has 80 million annual transacting actives. Okay, well, you have to see what an active is. Because if you're just going to say an active, like an active could reasonably be an account, right? So that's from their annual report. I'll go look at that in just a second. Let's see here. Cash App's users, many users have dozens or even hundreds of accounts. Well, I want to see these screenshots. Hold on. Let me go to the, because they didn't convert to a PDF. So let's go here. Cash App gang, who cares? What do we have here? Cash App as a sponsor, big deal. Of course they're a sponsor. Okay, here are the user metrics growth. Actives. Well, you have to look at what the definition of an active is. And if the definition of an active is just active account instead of active people, then it's not necessarily wrong, you know? Okay, let's see here. Some fancy graphs. What is this? Okay, yes, so what? A bunch of people, like, I don't know that there's necessarily something wrong with having a bunch of different Cash App accounts. I mean, there are a lot of Elon Musks. But you can name yourself whatever you want. That doesn't necessarily mean they're fake. I mean, I can name myself, you know, BJ69 or you know, 69 for BJ or whatever on the app if I wanted to. I mean, does it have to be your real name? I don't know. And look at, what is this? Credit card sent to Hindenberg, whose real name is not Donald Trump. Well, I mean, that's interesting. I wonder, but then again, I'm pretty sure you could put almost any name you want on your credit card. Like Danny Duncan showed me his credit card, and on his credit card from American Express, his platinum card says Danny fucking Duncan. And I'm like, that's pretty badass. They didn't stop you from putting that name on it? And he's like, no, they didn't care what name I put on it. And part of that reason is because you could put, you know, whatever business name or in theory you want. So I wonder if that's just more of a broad business issue or banking issue than it is something that's specifically related to, you know, what's it called? Jeez, Lord, Square. But anyway, what do we have over here? Here's a quote for details about a Consumer Financial Protection Bureau petition. What is this? Slow walking the disclosure to investors about the existence of the investigation. I mean, really? Like, somebody is supposed to get, like urgently respond to a lawsuit from the CFPB? Of course everybody's going to take that easy. The longer you drag it out. Usually, A, you want to be detailed with your response, and B, like, you got to run a business. Like, your top priority isn't responding to complaints. That's just part of business, though. Who's this? Proceeded to request a physical card, entering her name and the last 4 of her social, okay? Rather than requiring all 9 digits of her social, Cash App ran the incomplete investigation through a third-party ID check company to determine whether the information belonged to a unique individual. Why skip a basic legal requirement? I mean, that's fair, you know, if it should be the full, but how do we know that you have to? See, look at this. Identity verification. See, to me, that's more of a question of ideology then. Like, look at it this way. If you're Square and you're like, all right, the government requires us to check the IDs of people before we issue something. And you're like, well, the government allows us to use a third-party service to do that. Well, then it's incumbent upon the third-party service to do a good job. Let me give you an example. If you want to prove you're an accredited investor and you prove that to investready.com, like if you want to invest in House Hack, and they give you a letter saying you're an accredited investor and you defrauded them or they didn't ask you for all the right information, it's not my problem anymore because I'm relying on InvestReady as a third party to verify that you're an accredited investor. You know, that's a problem with InvestReady. They're promising me that your credit, right? So like businesses do that. They use third parties. I don't know, man. Okay, so they didn't require, okay, now they require, Block recently began requiring full socials. Well, looks to me like they're trying to fix the problem. I don't know, man. I like, to me, this seems crazy. I'm working to weed out the 40 to 50% of fraudulent activity accounts I'm working with daily. I mean, also, it's not uncommon for former employees to shit on the company they worked for. I don't know, man. This is not as much of a smoking gun as I thought it would be. Hindenberg, I don't know that they really had as much as they thought they had here. This is their 2-year investigation. Let me go to the investor relations page. Investor relations, Square. Let's look at the fundamentals. Because maybe they have a point about the fundamentals of Square being overvalued. Maybe they have a point there. And I don't invest in Square. And I don't short Square. So I really don't care. But let's look at their annual report anyway. And let's see if Square really is overvalued or, a fraud or whatever. I mean, to me, this, I don't know, man. It's just not so crazy. But you know what is crazy? And we're going to pull up this report here and I'll go through it with you. But what is crazy is Square's actually recovering here in the pre-market. People are buying the dip on Square right now. It's only down 15.8%. Coinbase, on the other hand, is down 17.18% in pre-market here. Keep in mind, if you want to use this awesome app, I am paid to tell you, you can get 12 free stocks by going to metkevin.com/Weeble. Metkevin.com/Weeble, you get 12 totally free stocks, which could pay for your life insurance you can get in as little as 5 minutes. All right, so let's look at this. This is their last annual report. Let's just do the same thing we did earlier with Coinbase. Let's go to their cash flow statement first. And maybe it's overvalued, but it's not a crime to be overvalued, right? Okay, so they lost a lot of money. They lost $553 million in 2022, while at the same time they managed to pay out to their employees $1 billion of stock-based compensation. Good Lord. Like, I'm not opposed to stock-based compensation at all. But, like, at least make money, right? Somebody here says, I ran a fake name for the longest time until they sent me a new card last year with my real name on it. That sounds like they're trying to get better. It sounds good to me. All right, so what do we have here? Net cash provided in operating activity. Oh, that's good. So we actually made some money from operations, but that could be deposits. That could be an increase in deposits. So I'm not sure if that's actually going to be free cash. That is one of the issues with looking at bank-style companies. So then you have payments to redeem convertibles, proceeds from, it looks like they paid off some of their, some of their PPP money. They paid some of that off, paid off about $480 million of PPP money. In 2020, I think people got mad at people for taking PPP money. I remember that with, what was that burger joint? There was something with an S. There was some burger joint. Everybody got mad at it. It's like, nobody knew what we were going to experience in 2020. What kind of hell we were going to walk into. But anyway, net cash provided by financing activities. Okay, so we got some money from financing over here. Okay, let's look at their actual numbers here. So we're losing money. Yeah, I mean, so you can't really do a multiple evaluation on them because they are losing money, right? So the multiple is really infinite. That is fair. In fairness, that's a very expensive company. Now, they are still growing transaction-based revenue. Unlike Coinbase, they're still growing revs. So let's calculate this really quick. So if I go 5701 divided by 4793, Shake Shack, that was it. Thank you so much. That's 18.9%. 18.9% growth. That's actually still decent in subscription or transaction-based revenue. 4552 divided by 2709. You're growing here by 68%. That's pretty good as well. Hardware up a little bit. Bitcoin revenue obviously fell. That makes sense. Transaction revenue costs are 2719, up 23%. At least that's better than Coinbase, where Coinbase had negative revenue and their transaction costs were like doubling. Like their revenue was half and their transaction costs were doubling. Like Coinbase is the real loser here. This short report should be on Coinbase. 861 divided by 483. that's a little 78%. That's also not that big of a separation from their revenue growth rate. So that's not terribly unusual. Their OpEx did explode though. OpEx up, and this is why their stock-based comp is skyrocketing. OpEx up 55%. Yeah, I don't know how they're going to go profitable again here. It's going to be a hot minute before they can go profitable again with this sort of OpEx growth. I mean, if they had this OpEx with the same growth as they used to have, well, they actually are at about the same level of revenue as they used to have. The problem really is their OpEx growth. So they have to grow faster than their OpEx growth, and they're growing their total net revenue is basically negative. Slightly negative. If you look at just these two segments here, not considering Bitcoin, 5701 plus 4552 divided by about, what do we have here? 2868 plus 775. I mean, they still grew by somewhere around 36% on their transaction and subscription revenue. And that is actually where they do have margin. So they just need to grow faster than their OpEx. Yeah, is it expensive? Are they likely to grow faster than their OpEx? Probably not. Would I invest in them right now? No, I think they're probably a toxic bombshell because you don't even know how many losses are going to come out of the loans from Afterpay. But their financials are actually not as bad as some of the other fintech players. They're not good. I mean, again, I don't want to touch them. But let's see, what do we have in debt over here? So if we look at actual debt, customer payables, we'll go away from that. Let's look at settlements, accrued expenses. That's 1.5 billion. That's 2 billion right here. Current, that's 2.5 bill. Safeguard, that doesn't matter. Deferred tax liabilities, I'll throw it. Well, those are non-current, so those don't matter as much. So we're gonna go with about 2.5 billies right here in roughly bills to pay. And they've got cash of 4.5 billion right here. That's not to include their short-term investments. That puts them at about 5.5 billion free cash, not considering customer funds, receivables, loans available for sale. Those could become worth a whole lot less because they're probably dangerous. This goodwill is insane. The fact that they put $12 billion for their brand on their balance sheet, that's nutty. Wait, what the hell? Look at their goodwill. Holy crap. Now see, that's where you could hit them with like, how do you say that? Look at their goodwill. They went from their brand being worth 500 million to their brand being worth $12 billion. I mean, see, that looks insane to me. That looks kooky dooky. But I mean, they've got cash. They've got so much cash that they could burn these negative cash flow. They actually have positive cash flow. They're not running out of cash. They're not going bankrupt. Yeah, their EPS might be negative for a while, but they have the capacity to keep burning cash because they're paying most of the people in the stock. Yeah, that's dilutive to shareholders. Does it really look like they're a massive fraud? Because they got some fake accounts and fake names? Not really. I think this is somewhat of a weak report by Square. But that's my first take on it. I mean, maybe it's worth going even deeper into it, but my first take is not that great.